Hello again, everybody. This is Matador from freetradingvideos.com. It's June 25th still. It's Thursday, and we've had a nice little run-up in the markets here. Pre-market, we saw a run-up to resistance, then a pullback down to support. I removed that data, but right on the previous day's low, we held a support, marched higher into yesterday's high, chewed around there for a while, which was also the 91 mark that we had in effect for a while. And then we are now testing on the 92 mark, and you can see that as a perfect gap fill all the way from before. So far this is almost 100% retracement of that sell-off that we had. So a pullback to make a higher swing low would not be unlikely now, and it's not unlikely again to stall at a round number like this or a 91 mark like this into the beginning of a gap. So the markets are behaving actually very nicely and digesting news very well that's negative. So if I take this, and we had seen some of the employment numbers as being negative, but some of the other economic indicators being a little bit better. So the GDP had dipped at a lower pace in the first quarter, and so that's partly why this is helping out. And anyway, it's nice to see that. The TRIN, if I can take this apart with you guys and gals for a moment, is right around neutral at this point and has spent most of the day above even 0.8. So the TRIN Q has spent most of the day below 0.8. So a bit of a divergence there. And when you look at that and say, well, which one do I pay attention to? Again, sometimes the tiebreaker is the VIX. And this guy has sold off beautifully, nice low base, and then sold off again. So kind of a nice tiebreaker, using the tick only as a real intraday kind of indicator. But if you're looking specifically at the trend, just for fun here, all this tells me is that I need to take a broader outlook of this and say, all right, what time frame am I looking at? So nice pullback into support. We'd already drawn this in. I think D7 actually picked that number almost to the penny, but that is a 100% retracement of this last run-up to this high base. So we have an X% better chance of making a lower swing high out of here. But again, watching how the market took apart negative data yesterday, watching where the trend was yesterday, seeing how we're testing away gaps like this, tells me a little something about the market sentiment now that I didn't have in my camp before, and that is that we're a little bit stronger than I thought we might be on this pullback to support. Could we form a lower swing high like I just said? Sure, we could plummet out of here. But right now, you have to read it as X% stronger than normal. So to me, that is just a really nice gap fill. If we chew away the round number of 92 in this overhead resistance, you can scrunch that up. You can see where we have overhead, the 92.50 area. Even if you want to be picky, 92.30, so 92.60. Those two numbers, and then the round number of 93. If we don't, and we pull back and make a higher swing low, intraday that would make sense. But for longer term, I would start again looking for a lower swing high, especially when you look at a 60-minute chart and see all this overhead resistance on the way back up. This is a sell-off, right? Like I said, it's 100% retracement almost of the run-up, and so look what we're fighting into. So bullish, yes, but again, take it into context. And again, you'll understand why maybe the trends aren't matching right now into this overhead resistance at 92. Good stuff. Well, trade well, everybody. Take a look at D7's video. He also did an intraday one as well. And look forward to his other one this evening at the close. And it's nice working with you. I'll talk to you soon.